What's up, y'all? Carolina Keith, regular Keith, just Keith. I'm just going to go with Keith from now on. Hope everybody had a good Wednesday and a good Thursday. It's February 12th. Tomorrow is Friday the 13th and Valentine's Day on the same day. Boy, that's risky, isn't it? You can't hear me doing that, so I'll flip it over to here first. And then I'll go. Now, I do one more working.
Damn.
There we go.
Damn.
So, Valentine's Day and Friday the 13th on the same day.
Come on, man. Bruh.
Risky. But hey, whatever. Luckily, me and the wife made an agreement a while back that Valentine's Day is neither of our favorite holidays. We both have a checkered past, and we both enjoy not really caring that much about Valentine's Day. That being said, I'm already going to do something for her. She just doesn't know what it is. Luckily, I know she's asleep already, and she doesn't watch this. That's right. Wife doesn't even watch my own stuff, so it's all good. We're going to talk about gold. We're going to do some charting here. We're going to do some technical analysis on gold, even though people says it doesn't work. We love to prove people wrong. If you haven't done so, please go hit like. It costs nothing. All you fellas who are watching and haven't hit like, please. It'll help out everyone if you hit like. It'll do me a solid. It'll help push around the algorithm, and other people will see it that wouldn't normally have the opportunity to come see some charts. You know what I mean? Hit the notification bell so you don't miss anything. And while you're there, subscribe so everybody else will know how many people we got watching. So first things first, obviously we talked about gold many times on this stream before. I actually made a stream back in 2022 where I said, hey, gold's going to do well and it's probably going to hit 5,000 at some point. That was always back in 2022. And that's not to go over here and say, I told you so, because it took 5 years or 4 years for that to happen. Well, it's 4.5 really. It took 4.5 years for that to happen. So it's not an I told you so. More so, it's a technical analysis thing where you can go, hey, this looks like it's where it's going to go eventually. I didn't think it would happen in a matter of a couple of years. I thought 10 years. It's more like half that. So first thing I want you to note here is that, yes, we hit over 5,000 an ounce, which was just incredible. But since hitting that number of $5,605, we are now down 11% back to just under $5,000 an ounce. $5,000 an ounce will be a contentious level because it is a heavy psychological number. And while we did short term overshoot it, we then went right back down and undershot it. And now we've got sort of this pulse pattern here where you're getting up, down, sideways, sideways, sideways. This is just consolidation 101 after having such a massive run up. How big of a run up? Well, how about in the history of gold? Never higher. This goes all the way back. This chart I've got right here goes all the way back to 1976, 1970, and right about where the gold standard stopped, right? 67 or I forget exactly when the date where the gold standard stopping was, but that was during the Cold War. And a lot of people will ask, well, why would they ever do that? Well, the way Russia was spending money to do military stuff and take over other countries and spread the word of communism, the government didn't have the ability to spend on defense as fast as they did. They realized they were behind the ball on spending. And they said, gosh, we've got to catch up. How can we do that? Well, that's when they switched to a debt-based economy that we have now. We've been on that debt-based economy for 50 years now. Obviously, the debt has accrued and accrued and accrued. And people like to say, oh, the debt was balanced back in the 90s with some convenient math. Correct. Now that math works in the opposite direction. And we just keep getting a bigger number and a bigger number. These other governments continue to buy our debt. And what people don't realize is they'll never be able to come get their money back because we have bigger bombs, guns, and more people who can shoot, and more active military and better equipment and better bombs and guns. We'll just simply fight back and never give them their money. It'd be really silly to loan us money, but they continue to do it because they want our business. And that's politics of the economic stuff that we've got going on. nonetheless, back then that run the gold price way up, right? And since then, we've been on a 50-year generational run here. Again, didn't think it would go this far, but it did. Notice big consolidation after all that run up. Great. Back to the daily chart. We are playing around with the 821 EMA here. You're still right now in the wait a minute zone. What is the wait a minute zone? Well, the wait a minute zone is the area between the 8 and the 21 EMA. That means, quite simply, don't go long, don't go short. Wait for something to prove it to you. We need to be over the 8 EMA, 2 candles in a row to have good solid proof. Likewise, you need to be under the 21 EMA to have good solid proof. That's for either a long or a short. We don't have either yet. We're getting one candle this way, one candle that way, back down, back up. Of note, we do have a lower high forming right here, which could be the potential beginning of a downtrend. And since that's the case, we can drop down one time frame lower and we can go down the 4 hour. We can look at the 4 hour and go, all right, if that's the case and that's a lower high, well, we can draw a trend line. So let's grab our top line here, a top wick, and pull all the way to the right and grab the next lowest wick, which will be right about right there. Okay. So if this is a true downtrend and we've found a top, we will not break this red line. If this is not a top and we have more juice left in the tank, well, you very well may see this thing break that red line and get going and do more. It is of note, it has not failed the uptrend that it's been making yet. It has been quite parabolic. And you can draw this multiple different ways. I do believe, yes, it is subjective how you would draw this here. But no matter how I draw it, she's still out for a absolute rip. Making a bit of a wedge, no matter what I draw, it's making a bit of a bullish wedge. So that's the daily, right? What do we need to see? I'd like to see 2 candles over the 8 EMA. I'd also like to see the trend break. And if it doesn't, well, we're bound for more down. How much down, you say? Well, let's pull it out here to the weekly and get a bigger, broader look. All right. So on the weekly, we can go all the way back here and say, hey, back here is when Keith was talking about gold going. That was actually before. Yeah, it was about summer 2022. That's about right. So, there was a time then where I thought, yeah, 3,000 to 5,000, and eventually we're going to hit 5,000 in a decade. Went much faster than that. So that was our recent lower high. Our recent lower high was all the way back in 2022. We've been on quite the rip since then, haven't we? So some people look at it and go, oh gosh, gold just started this. No, it's been doing this. As a matter of fact, if you go all the way back, you can see it's a big run up with some consolidation. Big run up, consolidation, big run up, and here comes more of that same consolidation. Historically speaking, we've had 50% and 61% retraces on gold. I don't know that we necessarily get that big of a retrace that quick, but we can use Fibonacci retracement to pull back here and figure out how far we may go back. I'll grab the bottom. I'll pull this all the way over here, and you'll see this is all the way back out to 2028. That's how far I just pulled that, and that still might not even be accurate. We might need to pull it farther than that. But this gives us an idea of some levels of interest in log mode. Levels of interest would be about 4,100 or 4,200 bucks. So call it 4,000 to 4,200 would be our first bounce back down level. It was also a level right there where it had a little bit of trouble getting through, but then it broke. And when it broke, it did really, really well. That would be back at the 382 level, which is about 3,500. All right. So those are my 2 levels I'd be looking for first. 4,000 to 42 or around 3,500. That's in log mode. If I flip it to linear, so it's a little different. The numbers are a little higher, but a similar idea. So 236 would be at about 46.65. We've already tagged that just the other day. And now we're still holding on to it right now. Now the next lowest level below that's that 4,000 level that I just mentioned a moment ago. And below that down to 50 fib, 3,600. So if this is a true downtrend and we're going to start slowing down here and we start marching south and sideways, as I think that may happen. If that's the case, those are my levels I'm looking for. 4,000 to 4,200 and 3,500. And I know that seems like a crazy thing to say right now with as hot as it's running, but may I introduce you to the weekly RSI. Bitcoin's weekly RSI, gold's weekly RSI has been really screaming hot. And this is just the weekly. Look at the monthly. Holy crap, 95 on the RSI. This is officially the second highest it's been in damn near a century. So we're talking about if you get a generation every 18 to 25 years, that's 4 generations worth of run up if you go all the way back here to the World War II era. But if you go back to the 60s, that would be 2 generations back, a multi-generational run up for gold here. And it hasn't been this high since 68. And this buy pressure, relative strength index on a monthly chart. This has to cool off at some point, and that's why those levels are what they are, in my opinion. Right? That's why I gave the levels that I gave. And I'm going to say this, it may take a long time before gold rolls back that aggressively or that far. I can't really control that. You know what I mean? It may be a very, very long time before all that happens. It may be a couple weeks. I'm not a mind reader, and I cannot be trying to be perfect with the Miss Cleo style predictions like that. We'll see little by little. Look at the monthly MACD. Look at the divergence between the blue line and the orange line. And if you don't understand what divergence is, that's separation or moving apart. And, excuse me, one half of the MACD is divergence, moving average, convergence, divergence, MACD. We have a lot of divergence between the blue and the orange there. That will at some point start to come back down, and that will be monthly. So if it's monthly, it's likely to take months for it to correct. And if that's the case, it's going to be a little bit. So great run. Amazing ride up. May not be done yet. Why do I say that? Well, let's look all the way back and pull fibs on this thing going way back in the Wayback Machine here. I'm going to flip this thing to the 3-month chart, a quarterly chart, just so I can keep the data on the screen easily. If I grab the top of 1979, and I pull fibs down and I drag them over just enough to where I can see everything I'm doing here. Look at how far this thing stretched right into the take profit fibs back in 2011. Bit of a retrace back to the bottom of the take profit fibs, and then another big launch up. You are all the way up above the 1618 into the blow off top fibs of 2.272, 2.414, and 2.618. That is insane. Those are blow off top numbers. And as you see, you're throwing a wick at the top of that one now. If I scrunch this back to, where is this? I scrunch this back to 2011 and I pull the fibs over and then bring them down to where I'm grabbing the top of the wick in 2011 down to the bottom of the candles in 2015. Well, that leads me right back up to where we were again. Big blow off top fibs, 2.272, 2.414, and 2.618. And of note, on the 3-month chart, you are starting to see some sell pressure. You still have a month and 19 days to go. That's underneath the picture of me. You can't see it right now. I'll drag it down. Right there you go. You have 1 month and 19 days left, so about 6 to 7 weeks worth of price action left for this monthly candle to do a little bit better. Quarterly candle to do a little bit better. And if I go back to the monthly, you can see you had the same thing happen right there where I had a bit of a sell pressure, but this month's already kind of gobbled that up. And you also see what's happening just today. I took that screenshot, and you can tell when I took the screenshot for the thumbnail that the price action was lower, right? But after opening the new candle today, she did shoot back up and start showing a little bit of power there, which is cool and interesting. And I'm not exactly sure I believe it right now. Like I said, I think this is still a little bit of a lower high. But if it can get back going and get over that trend line, I think a lot of different things, you'll start to see shift for gold. Now, let's go check out the other ones, silver and platinum. Something to drink on. Wet the whistle, as they say. Now, this one's really cool. If I look at silver here, and I'll pull the same, Fibonacci retracement on 2011 that I had for gold, only I'm on silver now, and I'm on the weekly chart and throw it to the monthly here. It's a little easier to see. Here's a typical normal style, big downtrend, breakout, back test, and then bang, off she goes. And where did it go? Straight to 1272, 1414, and 1.618. Now, it got there faster than I thought it would get, obviously. Faster than I thought it would get. But that is a perfect touch of the 1618 right there. You really can't ask for more. When someone tells me gold and silver went up because, I don't care about any of that. Gold and silver went down because, don't want to hear it. It's all about technicals for me. And it always will be, because that's the only thing that we can do that's objective. We can't start making up subjective stuff and then calling it fact. That's feelings or opinions, not fact. Facts would be what we can tangibly see, read, or count. So the way it's a logic is based on the sense check. You have senses as a human, right? Touch, smell, feel, see, hear. Right? Feel meaning tactile with your fingers, not feeling in your heart. So if you can't objectively look at it like we're doing right now with our eyes, use math that you have on the chart and call it for what it is, then you're not being objective, you're being subjective. If you have to start throwing stuff at it and saying, well, I think this because, and I think this because, if then, you're doing a lot of if-thens, well, that's all subjective and going to end up costing you in the long run. And I don't want to see anybody lose out on this stuff. We do this stuff so people can learn, so people can educate themselves and be a little bit better than they were when they started. You know what I mean? That's the whole point of why we started this YouTube channel way back in the day. We've been doing this for a really long time. I'll tell you, viewership has fallen off the cliff, and I don't think I'll ever get it back. People really don't like a message that doesn't go with what they say. There's certain groups of people who have proven that it doesn't matter whether I say a good thing or a bad thing, or if I say something right or wrong, doesn't matter. It's all the same reaction. It's just anger, hate, and frustration. And it's rooted in their own failures, but you'll never hear them say that. They'll always point the finger, right? One thing I learned from my grandpa back in the day, I remember I was at the campground when I was a little kid, and I remember pointing at a kid who I thought did something wrong. And I remember my grandpa telling me, every time you point your finger, there are three pointing back at you. Right? You point your finger, there are three pointing back at you. So maybe you should stop blaming everybody else. And for what it was worth, the little boy was throwing rocks, but I was throwing rocks too. I remember that vividly. That was at Pirate Land Campground in Myrtle Beach. I don't know why my grandparents picked Pirate Land. I think they thought that I thought it was cool. I didn't. But I was there for it anyway. I was there to hang out and, I was there to hang out and be part of what my grandpa and my grandma were doing. I don't have a whole bunch of regrets, but I kind of do regret not seeing them more. But my life took a wild turn and went in a different direction, and it just didn't work out that way. So, hey, anyway, you can't cry over spilt milk. You got to keep going. You know what I mean? So there's my take on silver's run up. Now, how far down? I've just drawn this for you, this fibs here. So you've already tested the 236 in a very, very rapid fashion from $121 high down to an immediate rapid jump back underneath that 236 where it wicked all the way back down to 63. You could even argue $62, probably on some places. All right. In log mode, 382 is at $49, call it 50. And then your 50 fib is at 37.80, 37.75 to 38, right? That's your 50 fib. And you note that back here is where all of our price action got very, very choppy. We'll have support there in the golden pocket if it ever decides to come back down that low again. And note that you do have support all the way up here from 2012, which happens to line up with our 382 at about $50. So I think it's fully possible that we come back down to $50 or even $37 for silver. Maybe not in a hurry, but I think it's fully possible. It's still obviously in an uptrend, even though it has slowed down. Therefore, no go until we see more failure, but those are my levels if it does fail. Here's platinum. So platinum didn't do as well as some of the other metals did. did pretty darn good. Can't complain, right? You went from the low of 574 on platinum to the high of $2,890 per ounce, which is pretty darn good. That's a big return. You're talking about 400% returns on platinum over the last 5.5 years. That's awesome. That's awesome. That's a great return. You couldn't do much better anywhere. Obviously, gold and silver did really, really well. But again, couldn't do much else anywhere. Not everywhere, but much else everywhere. So we came up, blew through our golden pocket, blew through Sniper's Alley, tested breaking all-time high, and you did close higher on the daily, but not necessarily the weekly or the monthly. Lots of wicks right here, okay? Lots of sell pressure showing up. And please note that it's still sitting on top of Sniper's Alley. Sniper's Alley is your last-ditch effort area for this thing to fail and roll back down. If it doesn't fail Sniper's Alley, it likely won't fail anymore. It likely will get back over that previous all-time high, jog around, and take another swipe at it. And I think that's fully possible. It depends on a whole bunch of factors that I can't control or you can't control. So that's why you'll never really see me talk much about those factors. It doesn't really matter that much. You know what I mean? It's all good. So there's gold, there's silver, there's platinum. I can't really say as far as how far I think platinum is going to come rolling back. If it does fail here, 1,700 to 1,500 is a reasonable level to 17 to 1,500 is a reasonable level to assume this thing might roll back to in the event that it slows way down. We'll see from there, but it's hard to say. It's a little easier with the other two. They sprinted so far that they must slow down. All right, so here's the S&P 500. I'm really tired, y'all. New schedule's whipping my butt. I'm going to stick with it and not quit. Quitting is not allowed, you know what I mean? Stick with it and keep grinding, man. All right. Being honest with the folks, whether we like it or not, we be honest. And good things happen when we're honest. Honesty sets you free. It might hurt, it might sting, but honesty keeps you grounded and keeps you humble. So S&P 500 was decent until last afternoon, right? Boom, big monster red candle rolls in, pushes us right back down to the 100 moving average where we came from just last week at the same exact time that we were at. Really wanted to see this thing hold on to the 821 and 50 moving averages. Super sucks that it didn't. Whew, sorry, I'm running out of energy. Super sucks that it didn't. However, it is still in its consolidation range. Consolidation range runs right about through here like this. So long as it chops around in that consolidation range, not too much of a super big worry. As far as your Ichimoku cloud goes, you are breaking into the cloud. That candle yesterday, don't want to see that. And here is the E-mini future Dow, which is the Dow Jones in after hours. If you notice, this one is still over the cloud on the daily. Not bad, where you see the S&P 500 had broken into it. Problem, you're playing around with the 821 wait a minute zone, just like you are with gold. Big sell-off yesterday. It did run back to support, but that's all so far. I need you to hang on. It was doing so well throwing those candles up there, and it rejected really, really angrily. I didn't want to see that, but it happens. Can't really do anything about it when it wants to reject that aggressively. One thing you'll learn about the market is if you try to play the blame game, it doesn't matter. It's too late. You already lost. Blaming isn't going to help. It's very feminine energy to place blame instead of take responsibility. Men don't want to hear that shit, but it's the reality. So back to more. Here's NASDAQ. Similar story here. Big run up, fell under the 50, fell under the 100, snap back up. Big run up, fell under the 50, fell under the 100, snap back up. Lower high, lower high, lower high, lower high. We're having a repeat of the price action that we had at the end of the year last year. Now, it did bounce and go sideways and consolidate a little higher, but not too much yet. So all that rejection of the 100 and the 21 moving average and all that is pointing us back toward the daily 200 moving average. It looks like a lot of these are going to hit or have hit the 200 moving average. Russell Index. Russell Index failed just like the other ones did, under the 821 EMA, but near the 50 moving average, just like it did this same time last week. I'm hoping here she holds on, doesn't just doesn't just lay over and give up. I'm starting to slur my words. I'm getting so sleepy. Sheesh, fellas, I'm getting old too. Gosh, it just hits you all at once, man. The age, energy levels, working 2 jobs, getting after it, doing as much as I can with the most. In case you folks don't know it, I got 1 kid in early college, 1 starting high school soon, 1's going to be driving soon. Wife's going to school to get her doctorate, so it's double duty for both of us. Plus throwing some extra work on top of that. That's what's going on with me lately, you know what I mean? So it's a busy world, is what it is, right? No whining. Just keep digging in and getting after it, and eventually you settle those stones on the bottom of the river. So Apple, you broke trend, you ran up, and then all at once yesterday, just all at once, poop, shot right through everything. Shot right through everything. That was on dividends too. Let's see what their dividend announcement was. It's usually pretty low. Yeah, a quarter percent. So you're getting 0.25%. Is that per year? No, that's per quarter. So you're getting 1% a year dividends. Not bad. So better than nothing. And you're holding on to a company that's likely to long-term accrue more value. But blowing through those moving averages like that kind of sucks. You don't want to see it do that. It did fight back and have a really good move up. It was one of the better looking ones. But after yesterday, crossing through all those moving averages is very, very aggressive. I need to see you try to get back over them on Friday to satisfy me and make me go, okay, she's probably not doing too terrible. Just needs to give it a couple days. Rough right now, though. Tesla, you snuck back over the trend line here. Sneaky dog. Back over the trend line, but I will warn you, she tried to get up over this 50 fib and did not. It got stonewalled. Just stonewalled right there about 436 and then turned around and turned the corner back the other direction. You're failing the 821 EMA now because of what happened just this afternoon that just closed. So failing the 821, but you're on the trend line. You're underneath the 50 and the 100. That sucks. But you're on the good side of the trend line. What are you supposed to do with this? So again, I think there's intrinsic value in this long term. I'm going to continue to DCA if it gives me an opportunity to. I haven't yet, but I'm going to leave it be for now because I got a lot in it already, and I don't want to overdo it. The gains are there. I think it's still probably going to go to 600 at some point, and I'm hoping that sooner rather than later. But I really don't have any control over that either. It'd be great if it did it by summer, because that gives you the opportunity to have that secondary push toward the end of the year, and that late November through the end of December, early November through the end of December time period when we see a lot of price action pop off either direction, up or down, doesn't matter. We always see very, very violent price action toward the end of the year. Fingers crossed that's what happens. So real quick, we'll go hit our crypto stuff. Bitcoin continues to just skate south. It did have a good little move up right there. I did manage to catch some buys down here at the very bottom. And she jumped up, but she hasn't done anything else yet. We're still waiting on Bitcoin to cross that 8 EMA and potentially attack the 21 EMA, but it has done none of that yet. If I go over here to our Bitcoin, let's do CME BTC 1. Yep. So this is the CME Bitcoin chart daily. Of note, you still have a big CME gap here that happened all the way back on Friday to Monday at the end of January when it was really, really giving up. It created a CME gap right here, which is a movement during off hours price action. So when we see that, we typically tend to see each and every CME gap close. Not always, so we tend to. It's a very high success rate. I want to say at or over 80% of the time these CME gaps get closed. And by closed, I mean price comes up, thinks about it, and then comes back down, or price comes up, thinks about it, hesitates, and then breaks out on the trend line and then makes a new short-term high. That would be the most successful outcome. I am pessimistic that that happens. So, 30 minutes of chart thrashing. It goes by pretty darn quick. I've been up for a long time. I'm going to go to sleep. I am beat. A lot of traffic. Traffic zaps the energy from me too, man. I got to get back in the groove. I believe summer will probably help that. So we'll see where things land out over the next day or two. I hope we have a good snapback Friday. I think that's needed after what happened yesterday. That would put us in a good position. Fingers crossed we don't go down too much farther on regular equities. I still think you're bearish long term here on Bitcoin until the end of the year. We may get that summer bounce still. That's still in play, and you still have a lot of oversold stuff as far as crypto goes. Your metals are still very, very overbought. I think consolidation and more down is ahead in the median to longer term future. We'll see. You know what I mean? We'll see. I don't want to overdo it or overthink it. For now, playing with the 821 EMA on most of them. Thank you all for watching. I appreciate it for the ones who did come. We had less than 100 people on here this time. As I kind of expected, the numbers are dwindling each week. We had 1,000 not 2 months ago, 3 months ago. It's wild to see how fast the drop-offs can be. And even though I know the algorithm of some of these sites that we use to stream with, it doesn't seem to matter. Doesn't seem to matter if I change it or not. So anyways, nonetheless, I appreciate you guys coming and hanging out. Thank you all. We'll see you on the next live stream. Sky's the limit. I'm out. Peace.